Hello, this is your progress report for the economy and what's really going on in the world. First off, we're going to tell you that we're really glad to have you guys here. Welcome to this show. And today is Sunday, February 4th, 2018. Now, here's the thing. I'm going to give you something that is what I think, my personal opinion, is going to be a great investment, but it's going to be like a 10-year long investment. It's going to take to yield, but when it yields, it's going to be fantastic yield. Fantastic investment, and I'm going to explain to you why toward the end of this program. It's going to be like when I told you about Litecoin, when Litecoin was $3.80 a piece. And we all know what happened with that. They went up to $350 or more each, ultimately. And there's people that sold them at $350. And I did the buy signal at $3.70. Well, this is going to be just as big. And on the end of this show, I'm going to tell you what it is. The investment. But it's going to take about 10 years now to get that kind of money out of it. So if you're willing to invest, it's going to be a good, I think, well, this is not financial, okay, I'll not financial, but it's going to take a few years. This is going to be a slow, long-term simmer. No, it's not silver, okay? It's not silver. But I'll tell you at the end of the show what it is, okay? And I'll tell you why it's going to be so good. But first, let's talk about what's coming. What's coming right now? A destroyer is coming. Something like you've never witnessed before. The last people that witnessed something this severe was back in 1929 when the stock market crashed. That's the last time we saw something this severe, what's coming. And what's causing it is the Fed. In 2008, the Fed knocked the borrowing rate down to almost zero. They knocked the short-term interest rate, which they have complete monopoly and control over that. In fact, they have a lot of control over all the interest rates. They don't have as much control over the 10-year or the 30-year and stuff, but they have a lot of control over the short end. And they knocked it down to zero, or close to zero. Now, it had stayed there for a long time after 2008. You notice that at the rate that they've been raising it, little 25 basis points to a time, till now. And they've been behind the curve on these 25 basis point rate hikes, and they've been like very much hesitating to do it. They're scared. They're scared because they know what's coming. They've painted themselves into a corner, both the Central Bank of the United States, the Bank of Japan, and Mario Draghi. They've all painted themselves into a corner now at this point. A corner that they can't get out of. They cannot not raise interest rates. They have to raise interest rates. And at the same time, if they raise interest rates, they're going to blow up the economy. They've painted themselves into a trap. They're almost like a man that's walking along and he steps on a landmine. And he's standing there, and if he lifts his foot, he's going to set off the trigger. Goodbye leg. And believe me, this has happened before in wartime. They step and they're walking through a minefield and they hear a click. And the guy's standing there and he's stood on it and it's click. And he knows that's a switch. And if he lifts his foot and takes the weight off of it, boom. He's in trouble. Now, this is exactly what the central banks have done to themselves at this point. And they're holding their weight on that switch. But the switch now is coming up anyway. They're losing strength. They can't keep that weight on that switch any longer. And right now it's lifting, and that's the 10-year and the 30-year. They're going up, and their yields are rising. Now, let me explain something to you about this. The stock market, on average, pretty much across the board, you know, on the stock market, you're what's the word I'm looking for here? Just a second. Sometimes I have a little bit of a brain fart from time to time. Dividend yield average, that's what I'm looking for. on the stock market, your dividend yield average. That's the word I was hunting for in my mind. Anyway, is somewhere around 2%. Maybe 2.25, give or take. Dividend yield average. But now that average is what you have to figure is going to be your yield. Everybody's hunting for yield. They all want yield. Yield, 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 yield. All the money managers out there all want yield. Well, what's the 10-year at right now? 2.85? 2.83? And your average yield on your dividend yield on your stocks is about 2.25? It's a no-brainer. Now it's going to head up to 3%. What's going to happen? It's a no-brainer. Stocks are going to fall because the bond market's a huge market, mega market. So we got this happening, and stocks are going to suddenly become less attractive, much, much less attractive. Now, what's the effect? How attractive are they when they start to crash? And compared to higher yields in the bonds, how attractive are they then? I mean, you think they're not attractive when the yield is already not equal, so it's less dividend yield average on the stocks than it is on the bonds when they're doing okay. What's it going to be when they're crashing? There's going to be everybody wanting to get out of there, every man for himself. Of course, even with now you got to understand something else too. The maturity of these bonds that the Fed is going to not roll over. This is why they're going to be increasing it. I think it's by $6 billion. They're going to be increasing the effect. So they start out with a certain level here, right? And then a few months later, they're going to up it to here, the amount that they're selling of their toxic balance book. So they're only still down here, and the stock market's starting to crash. What's it going to be? And they're determined to do this. What's it going to be when they raise the bar to here? And to here? And then here? Can we all say goodbye stock market? So what's the net effect when the stock market crashes to a certain point? Well, it brings on the depression. And we start to go into a deflationary funk. The stock market goes down low enough. Everybody starts to get the idea, hey, you know what? We've just had a stock market crash, and now the economy is going down the pooper, down the toilet hole. And then fear starts coming into the market. We replace greed with fear. And then we get a whole different market condition than we have right now. This is what's coming, right around the corner. Now, this is the thing. Tomorrow morning, we could continue with this crash, or we could recover. I don't know which way it's going to go. But one thing I can tell you with certainty, that if in a month or two the Fed doesn't reverse their course that they're on, with selling their toxic balance book and raising interest rates, because in their March meeting, I think it's around March 20th, they're going to raise rates again. This is a game of Jenga. Now, I did a show on this, and I said the Fed's playing a game of Jenga about probably months ago. This exact thing I'm talking about right now. Now we're getting closer to what I was talking about. We're getting much closer. And it's actually starting to happen now at this point. Now, say we recover on Monday. Say we recover next week. Okay? What's going to happen? Okay, we recover. Everybody will breathe a collective sigh of relief. Listen, boys, it's only going to get worse. Because even if we recover, the Fed's going to continue with this selling their toxic balance book, and the yields on these bonds are going to continue to rise. And when they crack 3%, right now they're not that attractive. The difference in for a money manager, the difference between, say, 2.25 dividend yield average and a 2.85 is not a real big. What's that, 60 basis points? It's not a real big deal. But you start getting it up over 3%, say 3.25%, and then you got one whole basis point. That is a big deal. 1% is a big deal. And we're going to start to see the shift. And you're going to start to see stocks then really start, the bottom start to fall out of them. And this is going to set everything on fire. Are you ready? This is it. Even if we recover on Monday, and even if we recover this week, it's coming back in a month or two. And it's going to come back with a vengeance. This is not over. We're not going to get out. I don't think we're going to get out of the first half of this year without seeing major changes to the financial system. And it's all induced by the Fed. The Fed is public enemy. I mean, they call themselves but they're really what they're doing is they're working for the banks, and the banks do not care about you, the public. They actually have written it into law where the FDIC insurance that you have on all your accounts out there, you're insured. You say, oh, my account's insured. Believe me, they can take your money and they don't have to give you a penny back because, first off, that FDIC, Federal Deposit Insurance Commission insurance that you have on your account, it's going to go, the money is going to go to the big shots ahead of you. And the thing is the big shots, they're going to take it all because there's not enough money to go around in the Federal Deposit Insurance Commission if more than one or two big banks go down. There's not enough money to go around. And so they're going to get the money ahead of you, and there's going to be none left for you. Not one penny. Kiss all your money goodbye if you got all your money in the bank. So that's why I've been warning you guys. Just keep enough money in your bank account to cover your bills. Money is what it's always been. Money is gold and silver. And I'm not talking about SLV and GLD. Money is gold and silver in your hand. If you don't hold it in your hand, you don't own it. If you've got it in a vaulting company, and the bank goes into receivership and they own the vaulting company, kiss your money goodbye just like you can kiss your bank account goodbye. You got to start getting smart in this day and age, in this society we're living in. Put away gold for yourself, put away silver for yourself, and put away $5 bills in hard cash. Put it all away for yourself because you're going to need it. Maybe very, very soon because this thing's starting to go down, you know, seriously. So now I'm going to get to tell you about what this investment opportunity is. First off, I'm going to lay the groundwork for you. The Saudis went over there, Saudi Arabia, and they had an oil reserve of like 196 billion barrels. And they went in, they started pumping it out of the ground years and years and years ago, and they've always claimed to still have 196 billion barrels, no matter how much they pump out of the ground. They pump and they pump and they pump and they pump and they pump, and then the next year they have the same amount they had the year before, 196 million, and then they pump and they pump and they pump for years and years. 30 years goes by and they still claim to have 196 billion. But if that's the case, why are they pumping seawater under high pressure into their wells to keep the pressure up? I'll tell you why, because they've been pumping it for years and years and years, and if they really did a calculation, you'd find out that all the oil, probably 3/4 of it's gone. And when it finally runs out completely, it's going to run out fast with a big hissing sound. Bang. They're going to have to put a sign on the well that says empty. It's just like a tank. What it is it's like there was a huge tank underneath the ground full of oil, and they've been pumping that tank and pumping that tank. But the tank was so huge that it's taken years and years and years, but now the tank is probably 3/4 gone. And, you know, when it finally runs completely empty, it runs empty all at once. Boom. Right? Now, what about Texas, West Texas? Well, yes, West Texas has got oil, and so has Venezuela. Venezuela's got a lot of oil, but Venezuela oil has to be mixed because this stuff is like sludge. It has to be mixed with thinner oil before it can be usable. You know? And West Texas oil is very suitable to mix with Venezuelan oil. But Venezuela's got a big reserve. Something like, offhand, I think it's something like 70 billion barrels. And so has West Texas. West Texas has got a huge reserve in the Permian oil basin. These reserves are being depleted. The cheapest oil in West Texas is going away it's being extinct. It's going extinct, the cheaper oil in West Texas. The next generation of oil that's going to come out of West Texas is going to cost a lot more out of West Texas. But they got a lot of oil. It's going to cost a lot more, a lot more. Saudi oil is going to be depleted almost completely, and so their price is going to have to go way up because they're not going to have near as much oil to give. And so now where the earth always uses, every single day has a set supply of oil that they use. And that set supply of oil has actually been creeping upwards just slightly, but it's a set amount that they use. I forget exactly what it is. I think it's like 30 million barrels a day or something like that. 31 million, I think, offhand, off the top of my head. You know, I probably should look it up, but I know it's a set amount that they use. I think it's 31 million a day barrels. Something like that, every single day, every single day, every single day. And if these oil companies supply more than that, there's a glut and the price drops significantly. If they supply less, then there's a shortage and the price rises significantly. Now here's the thing. As time goes by and this new, more expensive oil starts to come out of the ground, there's only one really big oil supply left that's been untapped, mostly, for the most part, untapped. And most people don't really know about it. And the reason why they don't know about it is because it's the most expensive oil to get. It costs a lot to get it. And right now, because the price of oil is like only 70 bucks or whatever, it's not really worth getting this oil. So right now, at this point, this oil reserve that's left, the shares and prices of it are really cheap because it's hardly worth getting it for the price that the oil is, because it costs so much to get it out of this material. This material is called tar sand. And there's oil locked in the tar. And you have to go through a chemical processes and heating processes and everything else, and steam and everything else to get it out of this tar, and it costs a lot of money to get it out of the tar, the oil, because it's stuck in the tar. But it's the biggest oil reserve left on Earth when you take in the overall of it. So if you squished all the oil out of this tar, there's more oil than there is in Saudi Arabia. There's a lot there. Now, right now, it's meaningless. Oh, I shouldn't say meaningless. It's not really meaningless, but it's like costs more to get it out than it's worth. So nobody wants it right now, or the prices of it is extremely cheap. But now think 10 years into the future, when Saudi's depleted, when West Texas is costing much, much more to get it out of the ground, much, much more, maybe 3 times the price it is now. And all of these other places like Venezuela, they're still pumping, but they have to mix their oil with other oils. The whole thing, you can see the prices going up 3 times what they are now, or more. Now, by that time, when you go to the pump to buy gas, what are you paying in the United States for gas right now? I don't really know. What, $4 a gallon or something? $3.50? I don't know what it is. I know what it is here in Canada. It's $1.18 a liter, which works out to about almost, $4.50 a gallon? Something like that. But your guys are probably a little bit cheaper. Maybe, I don't know what it is, $3.50 or something? $3 or I don't know. But anyway, picture $12 a gallon at the pump. This is what's coming, but 10 years down the road from now. Oil prices are going to be 3 times what they are now, probably $250 a barrel, and right now they're $70 a barrel. Well, this oil that I'm telling you that's locked in these tar sands costs about $60 or $70 a barrel to get it out and get it to market. And right now the oil price is only $60 or $70, so you're not making nothing. It's worthless. But 10 years from now, when the price is $250 a barrel, then you'll be making $190 a barrel. Suddenly, it's become a valuable resource out of nothing. Now, stock in these companies. And I'll tell you where the reserve is. It's right here in Canada. Okay, I'm going to read you a little article. And this is going to be the investment of a lifetime. And honest to goodness, the article is in Finance Magazine. It says the biggest long-term opportunity may lie in the unloved oil sands. It feels like everyone hates the oil sands these days. From Alberta-owned politicians, foreign domestic investors, the oil sands are incredibly expensive to operate, and they've been stamped with the stigma of being notoriously filthy for the environment. Many extreme bearish analysts have predicted and noted the possibility of firms throwing in the towel on the oil sands altogether in the future. Many foreign investors have lost all their confidence in the oil sands, and several domestic pundits, like Kevin O'Leary, have also turned off by the thought of investing in Canada's unattractive energy industry. Carbon taxes, transportation bottlenecks, global crude oversupply, and higher than average operating costs are enough reason for many to dispose of anything oil-related. There's a gigantic cloud of uncertainty surrounding the Alberta oil patch, and investors, despite uncertainty, which means that many oil operator exposed firms, things couldn't possibly get any worse for here, or could it? It says the perfect storm of headwinds has sent shares to near all-time lows. So there you go, right there. The shares in these oil reserves in Canada right now are at all-time lows, and I'm going to tell you what, you're going to have about a 10-year wait on this. But what you're going to see is you're going to see this come back with a vengeance. I'll tell you what the companies are. It seems like one of them is CENOV Energy Incorporated. It's on the TSX as CVE, is in capital letters on the TSX. Toronto Stock Exchange, CVE. Another one is Baytex Energy Corporation, Toronto Stock Exchange, BTE, and these firms, the outlook is bleak, very bleak. So it says Cenovus is on the cutting edge of oil extraction technology with solvent-aided processes which could lead to huge cost savings in a few years from now. So there's your company right there. They're going to be looking at huge cost savings, but at the same time, oil is going to go way up in price, you see? And they've got these new cutting-edge oil extraction techniques, solvent-aided processes which could lead to huge cost savings in a few years from now, right? And it says Baytex, another corporation, is also steadily moving toward lower cost production growth as it capitalizes on vast acres of untouched reserves. Both firms are chipping away at debt and have massive upside over the long term, 5 years out. So 5 to 10 years from now, here it is, right here. And this is for the long-term investor, right here. It's something that's going to have probably yields. It's going to be like unbelievably good a few years out. So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next episode. Bye.